Shrishti Oja, founder Veris Law, who is also the moderator of this panel discussion. Michael Stirrell, head of regional representation to South Asia, European Investment Bank. Vinay Rangani, CIO, Gravis Group. Perumal Srinivasan, managing partner, Exponentia Capital Partners. Chinmay Kaddare, partner, Epic Capital. Farzana Wadia, head brand capital. I welcome all of you to please be on the stage. I now take the pleasure in introducing the moderator for the panel, Shrishti Oja, partner Veris Law. Shrishti founded Veris Law in 2014. She specializes in capital markets, securities laws, and also sensitive dispute situations such as boardroom disputes, founder disagreements, and security enforcement strategies. Shrishti has advised Geofinancial, Ambit, SR, GE, ICICI Securities, as well as a range of high-growth companies such as Razorpay, Porter, Cashfree, and Norton Arc. Shrishti graduated from NLSIU Bangalore in 2002 with a gold medal in international law. She completed her LLM from the New York University in 2003 and passed the New York bar in the same year. Over to you, Shrishti, and the panel.
Hello. Thank you, everyone. Hopefully, it will be a lively post-lunch panel, and we have a very distinguished set of panelists. I was thinking if I should introduce them individually, and I think I will not do that, and I will pass on the baton the lazy way and have everyone introduce themselves and in the way they like. So over to Michael Stirrell. Am I getting that right?
Yeah, sure. Michael Steidl, actually. I'm the head of the regional representation of the Asia. I'm based in Delhi. For my personal background, I've been working in the development finance sphere for 3 decades now, 30 years, starting out in microfinance, micro businesses in 1996 when nobody knew what it was about. And then gradually getting to different topics, getting more into climate finance, SME finance, and now more recently I'm representing the EIB here in India, and our main portfolio here is public sector infrastructure. We also do some fund investing. That's about 10% of what we do here in India. So according to that, as you can imagine, compared to my colleagues here, my intervention will be scratching a little bit on the surface because I'm not a fund specialist. Our fund specialists sit in Luxembourg headquarters, but we have a relatively sizable portfolio here in India. We have around 6 billion euros, mainly, as I said, in infrastructure projects. Urban mobility is what we mostly do, and clean energy. And also the water sector is that we cater for. I just pass it along, right?
Good afternoon, everyone. I'm Vinay Rangani, and I represent Gravis Group. Gravis Group is most well known for Baskin-Robbins. I think a lot of you will be looking forward to a nice treat of ice cream after lunch. So Baskin is the one whom we brought to India maybe 30 years ago. They've also been in the hospitality space, so Intercontinental and Marine Drive, multiple other properties and assets which we have in the consumer space, including Zafran. So everything to do with consumer-touching industries. Group has been around since 8 decades old. I have myself been with them for about 5 years now. Total experience of 20 years in investments on both sides of the table, both on the investing side. It's been a great experience over here setting up the family office post their exit from Rich Gravis, which is another product which they were well known for. And we've been investing across sectors, equity, debt, proper asset allocation in place. We invest through funds, we invest directly, and that's the experience which I'm hoping to bring to the table here.
Hi, I am Perumal Srinivasan, but more popularly known as PR Srinivasan. Everybody calls me PRS. I'm one of the founders of Exponentia Capital Partners, a mid-market private equity fund. It's about a 6-7-year-old firm. I've been an investor for more than 3 decades. many people don't realize that people were making unlisted investments in the 90s also. Venture capital did start in the last 10 years. We've been around for 3 decades. So I worked for ICICI Ventures, then I worked for HSBC Private Equity, then I worked for Citi Private Equity, and now I run Exponential Capital Partners. In my career, I've done more than $1 billion of exits. So I've seen the market evolve over the last 3 decades, and I'm very excited about what's happening now and the way forward.
Hi everyone, I'm Chinmay. I'm a partner with APEX Capital. APEX is a growth and later stage investment firm focused on India tech. We are investing out of our second fund, AUM of $400 million plus. Some of our portfolio companies, yeah. Is this better? Yeah. Some of our portfolio companies are Lenskart. We were early investors since 2018. Zepto, CultFit, Jiva, which is a jewelry company, and Bhanzu, which is an online math education platform. Great to be here and looking forward to the discussion.
Hello everyone, I'm Farzana. I head Brand Capital. Brand Capital is the strategic investment arm of the Times of India Group. We've now been in existence for over 20 years, having invested $3 billion across 1,000 companies. So we invest across the spectrum, right from very early stage to, let's say, companies that are going IPO and beyond.
Thank you, everyone. It's one of the finest panels I've seen in a while. And let's start with Farzana. Farzana, Brand
Just when
Capital.
I got the mic on the table correctly, you asked me to pick it up again. Okay.
So Farzana, just as a refresher, is the director at Brand Capital, and Brand Capital is part of the Times of India Group. Farzana, it'll be great if you walk the group through what a typical investment structure looks like, and also share with us what attracts you to make an investment decision in a particular company.
Absolutely.
If I were coming to you, what should I know?
Yeah. So Brand Capital, what we do at Brand Capital is actually we partner with companies. We are less investors and more partners. Our currency is media, and we take equity stake in companies against the media assets of the Times of India Group that we provide to our customers. So what do we typically see in a company when someone comes to us? Is this a company which is very serious about building a brand? Is this a company which lends itself to trust, credibility, which is what Times of India and our assets stand for? Is there potential for customer education and adoption through print that will actually help accelerate this brand and grow? The reason for taking equity in these companies is some of these companies are very early stage, where cash flows is a constraint. So what we do is we actually partner with them as brand solution partners, and using the media currency, help them grow and scale. So the kind of companies that would ideally come to us is something in education, health and wellness, anything that requires trust and credibility from a consumer perspective is something that we really like to kind of partner with.
Great. Thanks, very interesting. And as a corollary, you're part of a major media group, a mainstream media group, and some excellent journalism. However, content is fragmented as of late. You have Instagram, Facebook, and just about any bite-sized content, and some of it may not even be real. How does the relevance of Brand Capital sit with the proliferation of social media?
That's a very interesting question. You know, we keep asking ourselves, how will we stay relevant in the digital world? And actually that question answered itself. See, there's so much content out there that the customer is actually getting inundated with unnecessary content every day. What we bring to the table is scarce, which is credibility and trust. So when a brand appears in print, what it is signaling to the audience is what it stands for. So anything that is premium, that requires trust and credibility, will always find itself in print. It is taking away from the clutter. So we actually see digital coming in as our strongest moat. What we used to feel like, will we be left behind, is actually now becoming a increasingly conversations with promoters are driven, how are we going to create a brand as a long-term asset? During COVID, we saw a lot of performance marketing, taking up most of the media pie. But as time has gone by, the founders have realized that performance marketing is only a tactical spend. It is very short term. It is at the moment that you will see growth. But what are you going to do when your brand needs to kind of go beyond scale with trust and credibility? And that is where we really come in as partners with brand solutions.
Interesting. So it's almost an irony that it is the proliferation of media which has been your moat as a
Absolutely.
traditional media company.
So yes, there's a lot of talk around AI. So efficiency will always be AI driven.
That brings me to the next question.
Yeah.
There are two more for you. What is the level of AI deployment? A lot of us look at TOI as traditional as it gets in a good way and all of that. And secondly, personally, which have been some of your more interesting partnerships? I know you've joined relatively recently, but which are a couple of partnerships at Brand Capital which you think have played off the biggest?
So just to put things in context, Times of India has been in existence for more than 180 years. Brand Capital has now been in existence for over 20 years. So we've seen these cycles, but we at the Times Group are very aware and know exactly where to use AI and where not to. So let's say video, digital will all be AI first. But print, real journalism, needs the human touch. That is our real strong moat, and AI can never replicate that. That is our strong belief. Now let's extend that to our Brand Capital portfolio companies. We're looking at businesses from the world of bytes, as we call it, which don't have a real moat, but experience-led, trust-led consumer brands is something that is so human that AI will never be able to clone that. And those are the kind of businesses that Brand Capital is looking to fuel, scale, and grow alongside. So very clearly, efficiency will be AI-driven, but differentiation will always be human. That's how we're seeing it.
The routine functions will be AI-driven.
So anything which is back-end
Yes.
is all AI-driven. I mean, we take AI very seriously at the Times of India. So anything that is execution and back-end, there's a lot of work going on behind the scenes where we are using AI or have started using AI tools. However, the journalism part, the human part, will always remain, kind of completely, there is a barrier to entry there. And that will never be replicated with AI.
Just a quick follow-up question, and the last one for you here. Do you expect your portfolio companies also to deploy AI? Is that a conversation you have at the investment stage?
Absolutely. Like I mentioned, for each and every one of our portfolio company, where we see efficiency, that will always be AI-driven. But brand creation, product differentiation cannot be cloned by AI, because otherwise the moat no longer remains and you become commoditized. So we are very, very careful when we encourage our portfolio companies to use AI, because it can be on the back end, but if AI finds itself to the front end, that is where, the moat actually kind of disappears.
Yes, cannot be AI-led, for sure. Thank you. Thank you, Farzana. I think Brand Capital remains unique in its investment format, and we all know that. Over to Chinmay. Chinmay is a director at Epic, and at some point has also been a director at Flipkart, and has also at the venture arm of Flipkart led a whole bunch of investments, which I will invite you to share. And on that note, what do you look at while investing in your current role?
Yeah. So just to reiterate, we focus on tech investing. So in tech investing, returns are driven by outliers. So the entire focus is to invest in those outliers. And what we see as key parts towards outliers is an exceptional entrepreneur who's building for a very large market. Those two are absolutely critical conditions. In addition, we also like to see very deep product customer value prop and also business model innovation which results in, I would say, strong and scalable unit economics. So those are the key ingredients of what makes a good investment which we look at.
Can you tell a good promoter from a great promoter?
Yes, but that's secret sauce.
Yes, because some of your bets have been excellent. That's why it includes Zepto and
Yeah,
a whole lot of others.
yeah.
And now that you're in very much in the growth capital world, with the IPO boom, we hope it is there to stay. But in any case, let's assume there's an IPO boom still, and the smaller ticket size, which is the younger VC world, growth capital sits somewhere in between. And what does that make you feel about growth capital
So
at the
actually-
moment?
Yeah, great question. I think see it as a enabler for the ecosystem. I think India is still, the entire tech ecosystem is still fairly early in its evolution. So capital markets or IPO markets are, they serve as a very good alternate source of capital. Of course, with different expectations, but great alternate source of capital. And also it's a good exit enabler as well for the investment ecosystem as well. So see it more as a enabler versus something which is a competition. So we welcome it.
Yes. IPOs as enablers. Somebody else had mentioned that the IPO exit is not certain, just in terms of pricing, etc., and it locks the company to compliance for good. And it's a longer gestation period. So then there are those obvious nuances between both the exits.
I think companies take some time to get ready for public market, but when they do, there's a different discipline, there's a different expectation which comes out of that, yes.
Back to everyone's favorite question on AI. And are you personally using AI in your firm, and do you expect AI to be used in your portfolio companies? Is it a negative if I pitch to you and I tell you that, hey, I do not know what AI is? And I'm not deep tech, I'm low tech. I'm selling shampoos.
Yeah, so let me break this up into a few parts, right? First, do we use AI at our firm? It's very early days yet. I think there are gray areas around information confidentiality, etc. So very early days of usage, you need to get clarity around those areas.
And may I interject as a lawyer, there is no client lawyer privilege.
Yeah, so absolutely. So hence, just being very mindful of and going slow on that. But I think when we look at publicly available information and researching that, it becomes a very good efficiency enabler. Which also ties in with your question is, our portfolio companies, they use AI extensively. So if you look at, I'll give you 3 examples. Lenskart, they use AI-powered GeoIQ platforms to decide where to open their stores. And they're ramping up multiple 100+ stores every quarter. So it helps in setting up the right stores in the right locations. They're also using AI for giving better recommendations. If I look at Zepto, Zepto is using it across the supply chain. It's using AI-powered tools for their brand partners, also using Cloud Code in their data and engineering teams. Another of our portfolio company, Bhanzu, which is an online math education platform, they use AI for 3 things. First, in a classroom, in an online classroom, they are able to nudge the teacher saying, hey, these couple of students aren't paying attention. It's a nudge. Plus, after the session is over, it gives feedback. So that's one. Second, it gives 24/7 chatbot to solve queries as they come to students, and also creates homework assignments. So we are seeing, and I just gave you 3 examples, but each of our companies is using AI in some way.
Thanks for that. I personally found Lenskart most fascinating because you would think that is as brick and mortar as it gets. But it is using AI even to decide the store locations.
Yeah, absolutely. I think Lenskart released its Q2 or Q3 results. Fantastic shareholder letter, which I would encourage everyone to read. Gives a lot more detail around how they use AI and tech across.
What is your advice to anyone who may be pitching to you
On AI?
on an investment?
Sorry?
Pitching an investment to you. Invest in my company.
I think multiple things. I already outlined what are some of the key areas, right? And so I think
Yes,
there's
you look for scale and you look for
so you
unit
would-
economics
yeah,
and
absolutely.
scalability.
And so I would say, look at how large is the market, what is your clear moat in terms of either a very deep customer value prop or a product value prop. Understand those things very deeply as you are thinking about why would it make sense for the investment firm to invest in you.
Directly from growth capital investment person. So I hope there are people sitting here who can benefit from this. And is there anything else you may like to add? Then we can move on to the other panelists. Okay.
I think that's broadly it. Yeah.
Thank you. Thank you for that. We'll move on. And to PRS.
Hi, yes.
Yes. Our favorite question on AI and what are your thoughts on it?
Well, I have been busy learning AI, how to use AI. So what I'm noticing is that, especially when we are talking about gathering public research about investments that we want to evaluate, Claude beats a fresh MBA hands down.
Coming from a veteran like you, that is a big statement.
Claude beats a fresh MBA hands down. I was very lucky. I got recruited as a fresh MBA by ICICI Ventures. Okay, will I do that now? I don't think I will. Okay.
That is very grave, actually, for the younger generation. That's a very grave statement.
Yes.
It's troubling.
Yes. See, what is very apparent now is critical thinking is more important than grunt work. Okay, there is a lot of grunt work we did as fresh business grads when we came out of college, and our seniors were dumping work on us, saying, find out all these 15 things for me and come back. So we did a lot of grunt work. But today, the data is available on the internet and it is easily accessible. And even that grunt work that we did in between, in the 90s when I started, there's no internet. Okay, so you really had to go into libraries to get data.
Yes, I remember that.
Then there was at least internet and people could log into the internet and get data. Now the AI goes and searches and comes back with an answer much faster than a fresh grad can do. So what we are looking for when you talk about fresh grads is that you have to ask the right question to the AI to get that data. So you have to read, process, understand what the AI says, and then say something flawed in AI's reasoning, because Claude still makes a lot of mistakes. And your ability to figure out those mistakes and reframe the question again and again, that is going to distinguish the fresh grads. My son is just graduating, so I know what I'm talking about.
This is very valuable for a lot of us. It predicts the future, and it is...
I don't know about predicting the future. I'm just telling you what I'm seeing right now.
Yes. The present itself, the future seems to be here. A lot of us think people will be redundant. But from someone so deep into the system, you're literally saying that a young MBA may or may not be needed to the same
ability to critically think
extent.
will still make you stand out. Your ability to think critically will make you stand out. No question about it.
And the ability to spot an obvious error.
Yes.
Because Claude is not.
Not only the obvious error, sometimes there is... because the way you ask the question makes Claude think in some other logic, and you have to bring it back saying, no, that's not what I meant.
Yeah.
Okay, so critical thinking is very important.
AI is like fire in the sense. It's not a good master. It's a good slave.
Yes, and you need to know how to get the work out of the...
Yes,
yeah.
or like a horse.
Yes.
To use a pre-industrial revolution analogy.
And Claude for Excel are just mind-blowing actually. How quickly you could make an Excel spreadsheet by just instructing Claude to make the spreadsheet. There are spreadsheets that I would have taken 1 week when I was making spreadsheets. At least nowadays I don't make them, But when I was making spreadsheet, there are times when you take a week to make a spreadsheet. Now, 20, 30 minutes, the spreadsheet is ready. Then you are spending another 2 hours finding logical flaws and rearranging the spreadsheet. So 3, 4 hours, you're done. And it's a first-class spreadsheet.
It's not a qualitative job. This is a quantitative, routine job. So it's a great use case for AI. This is not a critical thinking job.
No, but spreadsheets can be garbage in, garbage out. So the ability to think through and put the right kind of framing in the spreadsheet, you still need human intelligence for that. Okay? Spreadsheets have always been garbage in, garbage out. I mean, I started using Lotus 123 in the 90s. I don't think some of these people would have even heard of Lotus 123 as a spreadsheet. Okay, so even those days, spreadsheets were garbage in, garbage out. You really had to look through the spreadsheet to understand the logic. Now, the garbage is produced very fast. You still have to sift it through and make it work.
Great analysis of how that is. From a seasoned veteran such as you, I think you started HSBC's private equity arm.
No, I started with ICICI Ventures.
And ICICI and
I have one of my colleagues here. Yes,
Citibank's
ICICI, HSBC and Citi.
Back in the day, how have you seen things change? And like you said, people were still investing then, so we shouldn't think it's a recent phenomenon. But
no, I think things have changed dramatically. In '92, when I started, Indian GDP was 250 billion. Now we are.
It was barely liberalized economy.
No, yeah, exactly. 91, I was in business school when Manmohan Singh gave the big speech about liberalization. So actually, the business school graduates who graduated between 91 to 95 all had fantastic financial market careers. So it was a great time to graduate and be part of
the new India.
Yes, yes. So what I think has changed a lot is the ability to invest with first generation entrepreneurs. There was a time when you wanted to write large checks, you inevitably wound up dealing with big family industrial houses. So I've done deals with Jindals, I've done deals, those kind of deals. Now I don't have to do that. Almost all my deals are with first generation entrepreneurs, building something ground up. And I'm increasingly seeing a lot of companies that are kind of first in the world kind of ideas. He was talking about portfolio, then I said I should have also pitched mine. Today morning we priced the RHP came out for Sedemac Mechatronics, one of the companies that we invested in. And today morning they disclosed the price band and they started marketing. At least till yesterday I couldn't have talked about Sedemac. Today I can talk about Sedemac. Okay, and Sedemac is a company that was founded in IIT Bombay lab by a prof and 4 of his students. And they came out and they converted their idea into a company. And it is first in the world in the sense that we have a patented sensorless integrated starter generator. Only person in the world to make that. Company reported for December 160 crores EBITDA. So it has taken 16 years actually. The company started in 2008. And today, 2026, the company is going public. And what really stands out for me in Sedemac is that management has walked the talk. See, every entrepreneur says that I want to create an innovative company. Okay, nobody says I want to create a boring company, right? We all want innovative companies. Everybody says I want to invest in research. Okay, but for you to hold on to your nerve, going through tough times, sticking to creating intellectual property, okay, and now we have come to that stage where the company is growing. For the last 3-4 years, they've had high growth, okay, but there is a 14-15 year period of research and waiting for the market to develop and appreciate the IP. Sedemac management has walked the talk, and it is, like I said, only company in the world to have that patented technology. In 90s, we never thought about investing in companies that will have a global patent, which will go public.
Which is
so
monetizable.
Things have changed.
Yes. And the first generation entrepreneur has legitimacy for a while now, but definitely they didn't even exist in the 90s. In fact, the term capitalist, Punjipati, meant those with capital or those without, and they were traditionally the Khandani people.
Yes, I think even today I see some LPs talk to me about families that have a track record versus I'm backing first generation entrepreneurs who doesn't have a track record. Saying I want to back only those first generation entrepreneurs, and that LP didn't like my answer. But that bias was definitely there. In the 90s and 2000s, if I was going to write a 150 crore check, it was far easier to write with an industrial house which had done 5 projects, multiple businesses. They had credibility.
The business family, quote unquote.
Yes, business families, multi-generational business families. And the biggest problem with dealing with multi-generational business families is that their time horizon is 25 years, 50 years. Like my grandfather started this business, my grandson will run it. Okay, so unless I got my timing perfectly right, that the IPO market was willing to take the company, if it could go public, I didn't make a successful investment. Okay, but nowadays my first generation entrepreneurs are equally excited about a M&A outcome or an IPO outcome.
No, earlier there was a stigma to exit in the old business families.
Yes.
Now you're actively looking at exit.
Yes.
That's a good thing. It's the honorable thing to give an exit to your investor.
Yes.
And one last question to you. What is the best part of your job and what is the worst part of your job? You have an enviable job by most standards. You get to choose companies and invest in them.
I know, we had this conversation.
List companies.
I love my job because I get to meet entrepreneurs. Okay. Even the crooked entrepreneur I don't trust, he still has an interesting story for me to listen to. Okay. I get paid to listen to these stories. I can't think of a better job than this. Okay. I am very happy that, see, the entrepreneurs sell dreams. Okay. And many times the dreams are false. They don't come about because either the guy had no intention of doing whatever he said, or because the market didn't work out, or he had bad luck. Whichever way it is, sometimes the dreams don't succeed. And I've seen too many people become cynical. I'm very happy that I have not become cynical. I'm still excited to listen to the story the entrepreneur tells me. I love my job. I get to meet entrepreneurs, hear stories. In the small subset of entrepreneurs who like me as much as I like them, I make deals. There are enough entrepreneurs, so I get to do 4 deals a year. I'm very happy.
You have hacked happiness. Thank you for your insights. And shall we move over to Vinay? Vinay,
I've got too many of PRS's references. I was feeling young when I came in. I've got too many of his references. I'm really feeling old now. Go ahead.
So, Vinay, you're a little different from the other 3 in terms of you and Michael are both financial investors. So how do you see the India story play out? Do you focus mostly in, is your role more India focused? What are the asset allocations and how do you decide?
Yeah, so I think while our co-panelists have been on the equity side largely, and Farzana of course has been with Brand Capital on the marketing side, my focus is more from the family's perspective. So a family office is typically the assets of the family apart from their business. So we might have an operating business, we might be running different brands, there's an entire different operating team for it. They might require promoter support for funding, for growth, for additional capital. That is a separate discussion. But largely it is an independent run organization from a business point of view. From a family office point of view, I run my business completely separate from what the group does. Why does that happen? Because we are trying to essentially ring fence and demarcate the assets of the family versus what is the entire group. In our case, particularly, we are a privately held group, so we don't have too much, too much concern or too much worry about external investors and what kind of points they would be having. But let's say one of our subsidiaries is one of the portfolio companies of one of our investors here. They would, of course, have a lot of questions on how the business is being run. They might have inputs on how to grow it and so on and so forth. So to have that independence, we've already structured ourselves in that way that we are looking at it from a holder point of view. We are asset owners, not asset operators. My focus is therefore to ensure that the family's interests, the family's goals are being met. And for that, I can't be only having equity investments. there will be an asset allocation done from equity, from hybrids, from debt. Just to simplify it down, we invest across sectors. We are agnostic to whatever, which might be the growth opportunity which we foresee at that point in time. We, in fact, need to be nimble enough to move from one opportunity set to the other. With the changing markets, you may need to re-strategize and refocus on where your energies need to go and where your funds need to go. So that's how we bring in the differentiation. Our investments are largely India-focused. The group, of course, has been Indian MNC, so they have a lot of operations internationally as well. But as I said, the Indian portfolio is managed completely different from what the international portfolio is managed. That has its own risks and concerns which we look after. India has been a growth story. We've been active investors now since the last 5 years. We've done a fairly decent job, hopefully, and we're looking forward to the next stages of growth which come in India.
Thanks. And to bring this to the context, how does growth capital fit into your investment story?
So I would say
how do you decide how much?
It's a very, very large component, in fact, of our equity allocation. I would say growth capital would be one of the largest focus areas because that is actually where you have a lot of alpha being generated. Typically, as you go to a buyout fund, which is slightly larger in size, or you go on the other side towards a venture capital fund, the risk-return ratio, the risk-adjusted return which you get from both of those segments, we would rather slot ourselves in the middle over here where you've got a decent set of return which you're making. There is a certain amount of volatility and dispersal of your portfolio, but by and large, you've got a relatively stable set of growth happening. If you're very early on the venture stage, as you said, there might be certain winners which you might have in your portfolio, and those might do exceptionally well. There might be certain losses which you have to make. As a family office, we don't have the luxury of losing any of our capital. We'll say that return of capital is more important than return on capital because we are looking at it from a long, multi-generational perspective. We are already a 4th generation of business into the family. Hopefully, there'll be many more generations which will come ahead. We are building for that. We are not just building for the relatively shorter term.
Great. Good to know. Yes, because by the time when you're looking at growth capital, there's already a filtered portfolio.
So we invest through direct.
So that's a hedge right there.
Absolutely. So we invest through direct investments as well, and we do it through funds as well. So we already have the filter which is coming in from the lens of professionals who are managing it.
That's a double filter.
It's a double filter for us, absolutely. So my job then also becomes that I'm looking at the underlying investments which somebody is doing, as well as looking at the fund manager and what they are thinking. So it's a double job, if I have to put it that way.
Yes, which brings me to a related question. How do you decide which fund to invest in and how to invest? And do you have a theme preference?
No, so I think promoters also, when entrepreneurs are there and entrepreneurs go to investors, they have a story, as PRS rightly pointed out. They have a story which they are selling. And for us, it's the same case for a fund manager as well. There's a story, there's a theme which they believe in, which they think is going to do well over the next few years, which is why they are aggressively pushing for it as well. So our job is not only to get into whether that theme is something which is going to work out, but does that theme fit into my scheme of things? So if there is something which is a moonshot, somebody is building a portfolio largely linked to certain outcomes happening, certain successes happening after a period of time, which might or might not be, it might binary an outcome. I may not necessarily want to take those kind of risks. The fund manager might be great, his thesis might be great, but it might not fit with my risk profile. So I have to look at it from both point of views, that what they are investing into, the sectors itself we see having growth, as well as alignment with us.
Right. Well, thanks for that. It's nice to have a diverse panel.
Very.
And I think Michael is closer to Vinay just in terms of role. And as a financial investor, how do you make decisions? And for the rest, I will not quiz and grill you like the others. Yeah. You can take the discussion forward as you think best.
Yeah, okay, thank you very much. Financial investor, yeah. We call it the European Investment Bank. That sounds very business-oriented, right? It's not. I'm representing a very different animal than the rest of you here. It's actually a multilateral development bank. In order to give you an idea that can give you a glimpse of how we're different, I have an office in India. We as the EIB, we have an office in India. It's located inside the embassy of the European Union. That gives you already an idea that our thinking is different, right? Our thinking is more political. Our thinking is more oriented towards development and impact than towards commercial objectives. So nobody in the EIB gets rewarded for making money. Yeah? So we're getting rewarded for making, you would think, outcomes and impact, but actually we're getting rewarded for making promising projects that promise outcome and impact. Normally they also produce it in the end, but we're not getting rewarded for it at the end, but at the moment of signature, right?
That's very carefully worded. You should be a lawyer.
So we are engaged with the private sector in India, mainly through fund business also. So, but in order to give you an order of magnitude how niche this business is for us, the EIB is actually, many people don't know that, we're the biggest multilateral bank in the world. We're bigger than the World Bank. We have a portfolio of around 600 billion euros, 90% of which is inside the European Union. So we finance, I think, every high-speed rail and wind farm and solar farm and whatever in Europe, or the grids or whatever. You see there's some kind of EIB financing in it. So I work for a directorate that's called EIB Global. That is the part that works with the rest of the world, you know, outside the European Union. That is by statutes for us limited to 10% of what we do. So we have annual signatures of around 10 billion euros in EIB Global. It's 100 billion euros more or less in total. 10 billion euros in EIB Global. In that, our strategy is based on something that we call concentric circles. That means we concentrate much more on the neighborhood of Europe, especially the enlargement regions, Ukraine and all of that. North Africa also is very relevant because of the migratory aspect and the neighborhood aspect. India is part of what we call the outer circle, yeah, the rest of the world. There, the good news is that, for example, in Asia Pacific, India is definitely our biggest market. So what we do here is annual signatures of around about 500, 600 million euros, which is much less than you would see the World Bank do or ADB or whatever, but still it's significant. And for us, as I said, it's the biggest market in Asia Pacific. And the fund business of it is about 10% of what we do in India, right? So it's very much a niche market. We're very selective in what we do. And we look at it really from a point of view where we can create the most impact, where we can be most useful in the areas that are of interest to us. And the main area that is of interest to us usually is climate. So all we do in the fund business here is climate oriented, yeah? Investing in funds that actually support young companies, startups, growth companies that are in the area of climate in one form or another, be it in topics like green hydrogen, be it in topics like clean energy, anything that would be related to that. Our ticket sizes are relatively sizable because also to give you an idea, I'm the only person that is based in South Asia, so I'm not responsible for the operations. All our operations are managed by our teams in Luxembourg, which is the headquarters of the EIB. So for us, it's costly to do business here, so this means we need a sizable minimum ticket size. In the fund business, usually this is around, I would say on average, 80 million per ticket. In our main businesses, which is public sector infrastructure, loans, we're talking more about 200 million. Yeah? What else can I say? As I said, we're very selective. Many stars have to align for the EIB to invest in a project, right? It has to be a priority for European Union. We're not directly a European Union dependent institution, but we collaborate very closely with them. And in terms of policies, we align ourselves fully with them. And they have the policy in India to support mainly 3 sectors, which are called Global Gateway, which is, one is sustainable urbanization. They were very active by financing metros and light rails in 7 cities in India, but that's public sector infrastructure, right? Then the second one, which is more important for our funding, is clean energy. There we are very active, and the third sector is water, clean water supply. So this is the first thing that has to be clear from the beginning. Then, I mean, obviously, the thing that there have to be returns, and it has to be the economics have to be right of it. I mean, that's a given, obviously. Then we need green light and a clear okay from the Indian government for every project that we do. So they also have to be in line with what we're doing. And sometimes this is not as easy as you would think. We had several projects where we think it would have been a great impact, would have been nice to do, but the Indian government told us, no, we don't see you as engaging in this area. We see you more as a lender that would be really suitable for public infrastructure projects, big ones. So it's always a discussion on that level too. And then, this is now a relatively new development in the last, I would say, 1-2 years, is that everything we do now has to have a link also to European businesses. Yeah? For me, this is a bit, I come from a development point of view. I've been working 30 years in development, right? And usually when you work in development, your idea is, well, what is best for the country you work in, right? What is the best solution, no matter where it comes from. But the world, unfortunately, is getting more egoistic, yeah? Because not necessarily because of developments that come out of Europe, they come out of other places. I think you know what I'm talking about. But this has actually the added fact that also in Europe the discourse is changing a bit. So we're saying we don't necessarily want tight loans. That means loans where we say when we invest, it has to be necessarily European technology, like sometimes, for example, Japan does. So JICA, a lot of their investments then is for Japanese technology. We don't go that far, but we go far enough to say what we do has to have some kind of connection to European businesses, be it that European equipment is imported for that or used for these projects, be it that there is a technology partnership with European companies, be it that there is export potential to Europe, or there is, I mean, the most abstract thing maybe is kind of what we see as a diversification of supply chains, which is why, for example, we are very interested in now supporting the solar manufacturing industry in India, because this is an area that is, first of all, very crucial to climate, obviously, but secondly, absolutely dominated by Chinese technology at the moment. So for us, building up a viable competitor in India or South Asia could be strategic from a global perspective to have more diverse supply chain in this area. So their European interest is not directly defined in terms of European businesses, but more in a global competitor that is closer to Europe in that sense. And a question that I'm getting all the time here is what's the impact of the recent developments in India-EU relations? That's obviously a very positive thing. I can't say that there's the impact yet on the ground, because I mean the free trade agreement was announced. It's not yet signed. It's hopefully going to be signed in the next 1 or 2 months. But definitely there's a momentum of relations between EU and India that is very positive, and that we also see as very positive for our business. First of all, for our allocation of capital to projects in India, and secondly, of European businesses that will hopefully be more interested and more active in India than they have been done recently. And I hope that this development is really a deep partnership as we envisioned it in Europe, right? I think for us, India is a very strategic partner, and India hopefully is seeing this similar now. I am in India since 1 year, so when I came last February, one of the first things that happened was that the EU visited with the whole College of Commissioners India in February last year. so that you get an idea. This is the whole government of Europe, right? It's all the ministers. It's 23 commissioners. The commissioners are the ministers of Europe, right? They came all together. That never happened with a single country before. It was the first time this happened. So it was a very important event. And Ms. von der Leyen, the Commission President, I had the chance to be at her keynote speech then. I was really amazed on how she talked. She kind of made a marriage proposal to India, right? Saying we want a deep partnership and an ever deeper partnership, and or other words that she used was kind of an undivisible partnership. And my feeling was the Indians were like, oh yeah, that's very nice, but you know, we have other offers as well, and we're looking at other places as well. At that time, I think your government was still very much looking towards the US as a great opportunity with
a marriage proposal, but India was still flirting with US.
Yeah,
before
exactly.
It got
They
dumped.
were still flirting very deeply, but then I think that this relationship cooled down very much in the course of the year, and India is seeing now Europe is coming and is at the same place where we were a year ago, right? We're still here. We're still having the same proposal. We're still having the same interest in you. Europe as a continent, you know, I said this to several people here when we had a chat before. Europe is boring. But boring is a good thing in geopolitics nowadays because it's reliable, it's steady, it's clear. It doesn't depend on how one single person stands up every morning, in which mood. We're clear in our proposal, and we have a long-term view of cooperation. And I think that this is something that is boring but exciting at the same time. So I hope there will be a lot of opportunities that come out of this.
Thank you, and if I can thank you on behalf of India as well, I think it will be a valuable partnership. What was interesting was when you mentioned there has to be a link to Europe, but then you can also read any potential investment, even if it's greenfield, as broad-basing the sourcing story from China or from anywhere else. So by that logic, it doesn't have to have an immediate link with the European business. It could have a potential link as a supply chain diversification. So we're very happy to hear that.
Yeah. I think it's all about the narrative, right? As I said, we're not. The narrative for us is not the multiples and the returns that you can get, but it's really what's in it. So if you can build a credible narrative on how this is beneficial to European politics and European businesses, then this is something that we could sell.
Yes, now or potentially. Well, thank you. And I think we're nearly at the end of our session. And thank you again, and thank you to all the panelists. We are up for Q&A, or like I think Chinmay mentioned, there are AIs which catch who isn't paying attention. So maybe we can reverse it and just pick on any audience and ask them a question. Do you remember what he said?
Any questions from the audience side? We can always pass the mic. Anyone? Okay.
That's exactly what I had sensed, which is why I was saying if we can just pick on any audience and sort of ask them if they remember what who said. But that is on a more lighter note. Thank you, everyone, and I hope the audience has benefited from insights which are otherwise very hard to get, online or otherwise, unless you have real people with very special backgrounds such as this sitting right in front of you. And thank you.
And not giving any AI slop.
Thank you so much. You guys were really incredible. I'll request all of you to please come ahead for the group photograph. Meanwhile, we'll also go for a networking break for 10 minutes, and I'll request you all to please be here back by 3:40.
Thank you.
Thank you so much. Thank you.